Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and welcome to 2025, which is likely to be a very busy year. And starting off with this month, as the Australian dollar faces multiple bearish pressure, it is notable that the technicals have increased in terms of strength due to the bullish divergence and therefore could see a further gain. We do need to see a break above 62.45 to initiate a move on to 63.35.40 and reassess from there. The dollar index, which measures the greenback strength against a basket of 6 major currencies, continues to rise and now close to the 2-year highs. That is around 108.95. Looking into January, investors are eagerly anticipating January 20, when Republican President-elect Donald Trump will be sworn in as the President of the United States. Following the ceremony, though, Trump is expected to announce a series of decisions that could significantly impact global markets. But turning to the economic data, all eyes will be on the Australian CPI reading, which forecasts a 2.2% up from 2.1%. Also this week, we've got the main event being Friday's non-farm payrolls report, with a forecast of 154,000 jobs added. Along with that, with the unemployment rate steady at 4.2%. We also have this week the FOMC meeting minutes, the ISM services PMI and the JOLTS job openings. So yes, it will be a very busy start to this week. But as I mentioned with the technicals, with the bullish divergence kicking in along with the MACD, let's see if we can get a break above that 62.45 and on towards 63 cents. Any weakness, support is seen at 61.75. With the dollar rallying to the highs around 2 years at close to 109, has put significant pressure on the euro as it now finds support roughly around 102.55.65. With the technicals slightly in a positive stage, given a rebound out of the oversold condition, let's see if the market can break higher. Above 103.55 would initiate a move on to 104 to about 104.60 and reassess from there, with any weakness finding support around 102.55.65. With heavy bearish divergence playing a key part here, I do anticipate the market to eventually break down for dollar yen and look into the support level around 156.70.75. A break there will give further scope on towards 154.80.90 and with a cap seen around 158 figure 30 to 158.80 to 159. Overall though, with the divergence being heavy and the MACD declining, I do expect to see the bears increase in numbers. Turning to sterling, it's backed away from that key trend line that emanates back from September last year and now looks towards a support level, but briefly finding demand at 123.70. In light of the pattern, we still need to see a little bit more in terms of demand, and especially a rally on to challenge this key level at 125.50.80. But overall, it's going to be a bumpy ride for the start of this week for sterling, so let's not rule out further down challenges, but we do need to see a break of this trend to snap out of this bearishness. When it comes to commodities, gold still holds relatively firm as it looks now towards the region of 2,664 to 66, given the break of 2,634. I feel that the bargain hunters are still around, so any weakness towards 2,631 to 2,626 area should find demand. As I mentioned, I feel the market can climb higher, and given the fact the high geopolitical risks that are out there, that we could even break beyond 2,664 to 6 and on towards 2,700. Wrapping up with all cheers to the bulls as it exceeds the level of 71 to 72 and now looks on to 74, 40, 60, and that's where I draw a line. I feel the market may find pressure back to the downside and profit taking emerging due to the RSI being overbought. So let's see how that plays into this week. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new year.